Mr. Fisher, it's very nice to have you with us today. The New York Times tells you the long-time truth teller. So I look forward to hearing more truth from you today.
Oh, good.
Let's start with the financial crisis. Even though the crisis happened and started in 2007, a lot of Chinese people are still interested in finding out, especially from someone like you who was highly involved in dealing with the crisis at the time. What were the deep-rooted problems in the financial system that led to the crisis?
Well, there are no clear explanations of that, but there's certain assumptions of things that were done. One of them is that we had kept the rate of interest on money too low for too long. That's where the central bank was involved. The other is that the system had become so sophisticated that what we thought we saw, and we were regulating and supervising and overseeing, was far more complex than we realized. So I'll use a simple analogy. I work for the central bank of my country. If you think of a garden and the sprinkler system, the water system for that garden, in the old days we thought of central banking, say the People's Bank of China or the Central Bank of the United States, the Federal Reserve. If we just turned the faucet and made sure the amount of water was correct, then we'd have a beautiful garden with beautiful flowers, and if we didn't give it enough water, it would dry up and die.
Very simple.
And if we did too much, we would flood it and kill it. That would be inflation. What we didn't realize at the time was the pipes that we had for the sprinklers to water the garden had become much more complicated. Some were broken, and others had tapped into those pipes. So in our country, the banks represent only 25% of the financial assets in America. The other capital markets had grown so sophisticated that we didn't have the power under our laws, nor did we have the sight and the vision to understand how complicated the system has become. So now it's very, very different. We have broader authority. We're very mindful of what's happening in the other markets. We talk about it quite a lot. And we realize that ultimately, as the central bank of the United States, the People's Bank of China equivalent of the United States, in a very large economy, that we have a duty to preserve financial stability. If the markets are unstable, as they became, and they stop functioning, then you can't finance commerce or the people's consumption or their ability to buy property or their homes. So the whole system collapsed. And it was up to us, in the tradition of central banking, to rescue the system. And we do that by opening the floodgates. And this is a tradition that goes back in central banking history really to the crisis of 1825 in England. And that's when the textbook was written as to how to conduct yourself in a crisis. We did it in a modern context. And others will surely, if it happens again, we hope it doesn't, we'll have to go back to the old books and say this is the basic tenet of the central banker's job.
So do you think the reforms that have been taken are sufficient to prevent the crisis from happening again?
We have taken significant reforms. The laws of the United States were changed. The laws that govern our behavior as a central bank were changed. We've changed our own vigilance, and we supervise things much more aggressively than we did before. And we hope that that will be sufficient to prevent the system from overshooting once again. But I must tell you, it's in human nature. This isn't the first time it's happened. 1825 wasn't the first time it's happened. People in capital markets are always driven to take risk. And when you take risk, and sometimes things get out of hand. And there's a great book written in 1841 by a man named Mackay called Popular Delusions, Extraordinary Delusions. And he documents, going back way into ancient times, excess that occurs. So I don't think we can prevent these crises, but I think we can do our best to make sure they don't happen very frequently.
And it's the nature of the crisis that very few people will see it coming before it actually happens.
Well, we can see certain excesses beginning to occur. We should have seen them before. Again, we have only so much power as a central bank. And we're a very blunt instrument, but we still can make sure that our policies don't lead to excessive behavior and risk-taking.
But in what areas do you think warrant special attention?
Well, when you make money cheap, as we have done, and when you make it plentiful, then people naturally take greater risk. They want to earn more on their money. And when the most secure money, in our case, the United States Treasury bonds and bonds and notes, don't yield very much interest. And the safest investments are not very interesting. It's human nature to reach for more risk. Higher returns because they need to finance their needs. And that's when mistakes are made. So we monitor these different markets.
That's why you've been an outspoken critique of all the unprecedented measures that the Fed has taken to inject liquidity into the market, I guess.
Well, the first ones we had to do to save the system, and I supported all those. Our most recent ones have led to a very rich stock market. It's tripled since 2009. And different indicators of valuations of those markets and the bond markets, very important in the credit markets, are reaching historically worrisome parallels. So all I'm saying is we need to watch this very carefully if we don't become an agent of excess.
But
so far we don't have bubbles, but there are certain areas where there are indicators that where we've been there before, we've had what they call a correction, and we have to be mindful of that.
But you were saying the stock market was doing well, but you think that the stock market is overvalued, while the real economy is not doing well.
Well, I would say this. I'm not judging the stock market. The market makers make that happen. But I will say that it can't keep going in the same direction at the same speed.
Do you think there will be a stock market correction soon?
I don't know. But I do think when there is a stock market correction, if there is a stock market correction, then I don't think the central bank should panic. It is a natural thing. Markets, we say in the United States, are manic depressive mechanisms. Sometimes they get very excited about things, and sometimes they get very depressed about things. Yes. And they react accordingly. Our job as central bankers is to be unemotional, to preserve stability.
No hearts.
No, we have no hearts. Well, we have hearts, but we don't use them in central banking. Our job
Save them for elsewhere.
Save them for in your private life, but try to keep a cool head and not overreact. There will be corrections at times. There will be volatility, it's called. Markets go up and markets go down. That's the nature of markets in a fully open capital society like we have.
So do you think there will be a stock market correction with the real economy coming back this time?
It happened in 1962, for example. We had what was called the long correction in 1962, and yet the economy continued to advance. So one cannot predict these things, nor would I dare. But all I'm saying is that we are in very rich territory right now, and typically there is a correction of that. When it happens, I have no idea. And should it happen, the important thing is that the central bank shouldn't panic, and I don't believe we will.
Looking back at the financial crisis, what do you think the government should have done differently in light of what we know now?
Well, we, of course, should have been more mindful of what was happening in the financing of our housing stock in the United States. We're very fortunate in the United States that we have wide ownership of housing. It's the American dream. It's the key asset in any family. And the financing of those homes through mortgages, the structure of that finance changed. So it wasn't just a bank lending, say, you money to buy a home in your family. They were packaging these and creating securities out of them and selling them to other people who never even knew who you were, who the ownership belonged to. And this created its own feeding frenzy in the marketplace. And it became a market that ran out of control. And then all the complications of finance that built off of that were really the seedlings for this big monster tree that became a crisis that we experienced in the United States. We are in a very highly developed capital market in the United States and Europe, particularly in the United States. And only a quarter of our financial assets are in the banking system. So there are lots of speculators out there and speculation that takes place, and we let it get out of control.
You think the U.S. economy has bottomed out?
I think the economy is doing much better. It is growing. It's growing at a slower pace than we would like to see, but the sign is positive, and I think it will get stronger as we go through time.
So a lot of people are saying even though the crisis started in the U.S., it was also one of the first to come back.
That's correct, thanks to the Federal Reserve.
Yes, thanks to your job, a very important job.
That's right.
So do you think there are inherent advantages in the U.S. system that has facilitated the very quick recovery?
Well, obviously, I'm an American. I'm a patriot, and I believe in my country. We're at a different stage of economic development than others. So that's not a criticism against other forms of government, but we do have a very open capital system, a total open capital account. That means that when you make mistakes, you're punished more quickly. It also allows you, it forces you to reform more quickly. So we adjust. But we also have, within the United States, an enormous dynamic of change. For example, I come from Texas. It's
very proud Texas.
Very proud, but not just because of oil, which is only 2.5%.
That little?
Of our employment.
Okay.
But we are the biggest job-creating machine in America. So let's say a state like Michigan, which has been in deep trouble where the auto industry is based, we have so many people migrating from there, and especially from California to Texas. And that just creates a dynamic within our borders, and plus Hawaii, we have 50 states, that people can move around, and we can have different little laboratories of how the economy should operate. And right now, the most
I guess that's the advantage of the state system in the U.S.
Yes, I mean, again, our form of government is different, and our structure and our constitution is different. But Texas has been showing the way, and other people now are trying to imitate us more and more. And that's good. That creates change. If it weren't us, it might be in the 1950s, 1960s, it was California. That's where people went. Before that, it was New York. New York, you know, is called the Empire State. But people have been leaving New York. And if you go back 22 years, for every 100 jobs there were 22 years ago in New York, only 4 jobs have been created. In Texas, it's 62 jobs that have been created. So that's a huge difference.
Huge difference.
So, you know, but we're still one country, and so it balances out movement within our.
It's like a pilot ground that you can test out different ideas.
Exactly.
And other states can learn from the lessons.
And also the mistakes.
Yes, of course, of course.
So we're a very dynamic, fluid society, but we're at a different stage of development than so many other countries.
Of course, of course. A lot of people compare U.S. and China now, but China is like the post-industrial revolution stage in the U.S. and UK. It's
but China's going through a great transition. I admire the transition they're going through, and they have a long way to go. But you know, we've been around with our form of government now for over 200 years.
Yes.
When you think about it,
much more mature system.
Well, China's an ancient civilization, but it was many kingdoms and many princelings, and now you've had a republic starting with Sun Yat-sen. So it's fairly new.
But not that old, yeah.
No,
yeah,
really a century.
Young still, yeah.
At Sun Yat-sen, you had the nationalist government, which is still a nationalist government, and then you have the PRC. So you're younger than we are.
Yes, of course, of course.
I'm not saying
in terms of the republic.
I'm not saying we're wiser than the Chinese. I wouldn't say that, but you're a younger country than the United States as a republic, as a unified republic.
You've been very clear about your view that the Fed has done its share. And there's more than enough liquidity in the market, and it's the physical and regulatory uncertainty that's holding business from putting people back to work.
That's correct.
So what specific incentives do you think the government should offer to these business to create more job creating, capital investment, and encourage the economic growth?
Well, like the Chinese government or any other government, we have an ethic. And that is, we believe that a job is the route to dignity. And if you have a job, you raise the living standard of your family and your people. So the focus should be on job creation. The central bank provides the money. Think of an automobile. We provide the fuel. We fill the gas tank with, in this case, we filled it with very cheap, high-powered gasoline. And we have been stepping on the gas pedal full down to the floor. As they say, the pedal to the metal.
But drive down the interest rate to zero.
Exactly, and create enormous amounts of money. It's a historic, the lowest rates in American history for quite a while. Now, today, still the lowest rates in over half a century. But the fiscal authorities, which is the President of the United States and the Congress of the United States, have been stepping on the brink. We can only provide the gas. Someone has to provide the incentive for those that hire people, and in our economy, that's the private sector, businesses. The women and men that run business and goods and service production, they have to go out and hire. They have to have the incentive to do so.
What do you think that the government can do?
Well, first of all, they need to have the incentive of knowing what their tax rates will be. You realize our government only has a minor budget, and it's the first one they've agreed to in over 5 years. So there's been no budget from the United States government, no knowledge of what future taxes will be and how things will change. If you don't know what your taxes are going to be, you're going to be a little reluctant because that's a cost of doing business. then there's been no knowledge of how the government will spend its money. Our government is actually a major force in our economy. But right now it's not clear where the priorities will be because they can't agree within the Congress, so where they will expend money. How much goes to defense, how much goes to social welfare, how much goes to other support systems for the states. And then last, we have so much regulation now in the United States, much less than China, of course, but we're at a different stage of development. And we've just added new regulations for healthcare, which are very confusing and keep getting changed. So businesses, women and men that run businesses don't have any idea what their cost structure will be. And labor is the most important part of your cost structure. If you don't know how much it costs to have an employee, it's very hard to decide you're going to hire more people. We want to put more people back to work. So at least, without getting into specifics, those things have to be decided by the only people that have, under our laws in the United States, the ability to do that. That's the Congress of the United States working with the President of the United States. Instead, they've been battling with each other.
But do you think that problem can be avoided in a democratic system like the U.S.?
I think it has to be avoided, and it will be. But only if they realize that the central bank has been carrying all the water. We have the economy strapped to our back, and there's a limit to our power. And we've exhausted our power for the most part.
But most people would turn to the central bank.
Most governments always do. You know why? Because it's easy. They don't have to make hard decisions. And it's traditionally throughout history going all the way back to the Roman Empire, ancient empires, where when that happened, it destroyed a society. And we don't want that to happen in the United States.
But the Chinese will point to, the U.S. system, the Japan system, and the European system, saying that, see, you have democracy, but you cannot get anything done. Our system is very efficient. What would you say to that?
Well, again, you're at a different stage of development, but you are more democratic than you were under Mao Zedong.
Of course.
Okay, so, or under Chiang Kai-shek, when you had a nationalist government. So these are questions that each society has to decide as to how quickly they evolve. But I must say, the best examples of economic success so far in history have come from democracies. There's never been a more powerful economy in the history of the world than the United States that lasted as long as we've lasted. Or the democracies of Europe. Take a little, relatively small country like Germany. It has a parliamentary system. So at least history shows us that they work well. There might be new ways to craft different forms of democracy and capitalism. That's why I find the world so interesting right now. And I find China so interesting.
The Economist came up with a good article a while ago on what's gone wrong with democracy.
Right.
And that has aroused quite a lot of attention in China, actually.
Well, it's a good debate that should occur. What are the negatives of democracy and what are the positives of democracy? What are the negatives of centralized power and what are the positives of centralized power? So history will tell us.
You've long said that the quantitative easing, you think it has overstayed its welcome and the central bank should stop pumping money into the market. What are your concerns for the economy in light of the substantial quantitative easing steps that have been taken?
Well, just so your listeners understand, quantitative easing means that we buy securities. Normally central banks just broker the overnight interest rate. In making the interbank market, what banks and institutions lend to each other. What's radical about our current period with us, the European Central Bank, the Bank of Japan, the Bank of England, and other banks, the Reserve Bank of Australia has not quite done this, but the big central banks, is that once we cut interest rates to zero on the overnight rate, we then went out and bought. In our case, we're allowed to buy, under law, only two types of securities: U.S. Treasuries, the issues of our federal government, and mortgage-backed securities because they were guaranteed by federal agencies. So we're allowed by law to do that. And when we cut interest rates to zero, we wanted to put more money back into the economy because there wasn't enough activity. When we buy a treasury or a mortgage-backed security, we put money out, we pay somebody for it, we put money out in the economy. And so we've been buying a lot. And before the crisis, the balance sheet of the Central Bank of the United States Federal Reserve was a little less than $900 billion US. Now it's 4.3 trillion US dollars. So we've been buying trillions of dollars of securities. And that has helped our economy, but it's also led to some serious speculation. Our stock market has tripled in price, or at least in the price that it trades in the marketplace. We've seen interest rates come to very significant lows, even on the worst credits, those that probably should be bankrupt, are trading very dearly. And we've seen a revival, of course, of the housing market to such a point that now homes are becoming unaffordable to the median income people. So it's had a great effect in certain sectors. It hasn't led to the increase in employment that we would like to see, although we've seen unemployment come down, because again, businesses are still wondering. They'd like more certainty to come on taxes and federal spending and the regulatory front. So I would say we've been successful, but there are limits to what we are allowed and can do.
Are you in conversation with the government? Do you know that if they're coming out with measures to encourage?
No, we don't.
More business, hiring people.
We do analyze them and we study them. We keep a separation of power because we don't want government to poison our ability to conduct monetary policy, and they certainly don't want our advice, other than our general comments. But we are not elected by the American people. They are. They are the representatives of the people in our democracy. And they have to decide the specifics of the tax laws and the spending rules and the regulation. My point is, it should be focused entirely on job creation. Whether it's a Democrat in our system or a Republican in our system, whether the president's President Obama or President Bush, and the Congress is led by Democrats or Republicans, they should be focused on how do you create jobs? And more importantly,
most basic for the economy.
More importantly, how do you take advantage of what the central bank has done? We have, again, our gas tank is full. It's brimming over with cheap gas, cost zero. How do we take advantage of this?
You have to be good allies.
Well, they should take, I would like the federal government to take advantage of us. But right now, they've just countered the good we have done for the economy.
So you don't think Obama government has done enough?
It's not. I don't want to be unfair to the President of the United States. It's not just the President, it's the Congress of the United States that controls spending. Under our laws, the Congress decides what taxes will be. They decide what spending will be. They are heavily influenced by what the President provides for direction. Under our laws, as we say, the buck stops at the Congress. They're the ones that decide how much is spent and how.
Let's turn to China. At the time of the financial crisis, the Chinese government has also taken drastic measures to intervene into the market. What do you think of the measures taken?
Well, they did take drastic measures. We took drastic measures. Everybody did.
Huge stimulus package.
Exactly. And then after you have a huge stimulus package, as we did, you have to rein it in because it can't continue forever. There's a cost to having a huge stimulus package. And right now, as I understand it, and I'll learn more being in Beijing this week, there are efforts to obviously correct for some of the excess. The banking system is being worked on. The shadow banking market has been reined in significantly. Interest rates rose very high at year end. There's also the issue of reading what the Chinese president has done of reining in corruption. And then bringing about reforms to advance the Chinese society from its current status. Not have it be as much export-driven, but have it be more domestic consumption using the power of this giant country called China to drive its economy forward and improve the prosperity of its people. So this is an interesting experiment to watch. I'm quite fascinated by the transformations they're trying to attempt. You know, in our country, we have opposition to change like China has opposition to change. You have these huge state-owned enterprises. If I were running one of the state-owned enterprises, I wouldn't want much competition. It's perfectly natural.
Yes,
and so that's what leadership
human
is.
Nature.
It's human nature. And we have the same, if you have a big, powerful center like the automobile companies in the United States, didn't change, and yet they stayed operating the way they did, and many of them went bankrupt. So, and they had to be rescued by the federal government. We don't want to do that again. And the American people won't support that again. So I think it's unfair when people look at China and criticize them when they don't criticize themselves. All of us can do our job better. And you have unique challenges in China. And I'm eager to learn how that reform process is working. What I read in the newspapers and from the academic papers I read, it appears that your president is moving this forward very aggressively.
Yes.
And it sounds very impressive. I am anxious to meet with some of the leading officials and understand better how it's actually working. It's difficult to turn a very large economy around.
Of course, the size.
That size, and you're now the second largest economy in the world. That brings its benefits, and it also has its disadvantages. So,
have you been following the Chinese market, though? Do you think there is a credit bubble?
Well, it's not for me to say, but obviously there has been a steep acceleration in housing prices. By the way, we're having a rapidly accelerating situation, not quite as extreme, but and we read often. The last time I was in China, and the last time I had a chance to travel around the entire country, which was several years ago, to visit more than just Beijing, I was hearing about the shadow banks and meeting with people that were getting their financing at rather expensive rates, by the way.
Yes, of course.
Outside the banking system. And so I'm interested to hear now and see what's happened in terms of the reining in of those shadow banks. But remember I told you, in our system we found the sprinkler system, the water system for our garden. There were people that were attaching onto it, and it was much more complicated than we thought. I remember thinking when I was in Shanghai several years ago and listening to some shadow bankers, this is much more complicated. So again,
that warrants attention for sure.
I have a feeling that attention is now being paid.
Yes, yes, yes.
And,
not only the shadow banks, but also the local government level is they face huge debts now because of the stimulus package.
You know, you recently had a bond issue that failed, right? The company went bankrupt.
Yes.
That's a healthy thing in my view, because that points out that there is risk. And that those that invest imprudently will lose their funds or have to negotiate the settlement of those funds. So I think that's a significant development in Chinese market history.
But in China, the problem is that there's always the implicit guarantee of the state. So that leads to the mispricing of the risk.
Or the local government.
And of the local government.
Right. Yeah. And as you know, there's always
I was talking to a government official recently, and he was saying the advantage of the Chinese system is that even though the local governments have huge debts, the central government is able to allocate resources accordingly to cover the holes.
Yeah.
But that only works when there's only individual holes, but not a lot of holes at the same time, I guess.
Well, you know, again, we just went through a crisis where we had to step in as a central authority and cover many holes at once. You don't want to do that. I've been there. It's a painful experience.
You were the one negotiating the RMB currency clause when China entered WTO.
Right.
Some speculate that the Chinese yuan will overtake the US dollars as the global reserve currency, maybe in as short as 15 years. What do you think that needs to take place before this could
first, I don't think
even possibly happen?
I don't think it is possible. Not because it's not a great economy. But I think it's important to study the history. It took the United States a long time, even after it far surpassed England, for the US dollar to become the reserve currency of the world. And now the British pound represents maybe 5% of the reserve currencies. But for a very long period, after World War I, when America became supreme, it took decades for the US dollar to replace the British pound. The US dollar is 80% of all commercial transactions on one side or another worldwide. The Chinese yuan's to maybe less than 2%. And it's a question of how long it takes for to open the capital account of China so that money can trade freely. I don't think China wants right now to be the reserve currency. So I don't think it'll happen in my lifetime. But then I'm an old man. Not that old. According to the new global standard, right? Well, that's true. We all live longer, right? I've eaten a lot of fish these days. You are extremely multi-cultured. You were born in the U.S., grew up in Mexico. Your father is Australian. Right. Your mother is South African of Norwegian descent. Right.
What impact do you think that multicultural environment has on you, on your values, on your stance?
Well, I'm interested in the rest of the world because I grew up around the world.
And you were conceived in China, I just learned.
I was conceived in Shanghai, that's right. So manufactured in China, had value added in the United States and Mexico.
Yes.
I lived and worked in Japan as well. So, and I was educated in England. So I'm a mess, basically. Very confused. But I think it is important, particularly now in the post-Cold War world, to realize that there are many competitive forces. I like to remind people that in the United States, when we basically had, China was isolated from the rest of the world under Mao, which, by the way, was the first time in Chinese history China had been isolated from the rest of the world.
Yes.
The myth is it's not true. Only under Mao did it isolate itself. It was a great trading nation from the Silk Road period, whatever. So the great tension in the world was between us and the Soviet Union. And when I was a little boy, growing up, even in Mexico and also here in the United States, later on in life, we kept being warned about mutually assured destruction. That the nuclear weapons of the United States would destroy Russia, and Russia would destroy the Soviet Union, would destroy the United States. We no longer, because the wall in Berlin came down, Deng Xiaoping changed China, and other changes have taken place around the world. The Vietnamese, for example, who we were at war with when I was a university student, we now trade their bonds, buy their products. Every baseball cap made in America is made in Vietnam or Bangladesh now. So the American sport, all hats are made in those countries. So right now we've gone from mutually assured destruction to mutually assured competition. That's a good thing, not a bad thing.
Of course.
It's a much better world when we trade with each other and we don't war with each other. So I think we're in a safer, greater world. I think I grew up in a world that was one way, but I've been able and lucky enough to constantly visit other countries and see how this has worked. And I think it's a much better world than we had before. And I think most Americans now realize we're not an island unto ourselves. I grew up that way, but it's taken us to realize as a people that we don't live in a perfect world all by ourselves. We're now integrated, and this is what we wanted. This is what we fought a Cold War
citizen.
for. And the U.S. has become increasingly a global citizen.
Last question. I know you are a proud father of 4.
Yes.
A successful parent, and you went to Harvard, your son went to Harvard. A lot of the Chinese...
All 4 of my children went to Harvard.
All 4 went to Harvard. Okay, so a lot of Chinese parents would be interested in knowing what were your key education principles and what were the values that you want the Fishers to be known for?
Well, first of all, my parents had no education, so it's an American success story. My parents are immigrants, had never been educated, and all 4 of their children, well, I went to Harvard and then all 4 of my children.
Wow.
So I think it's really a matter of hard work, and valuing academics, studying hard, and then frankly being lucky. Being at the right place at the right time.
You have 5 in the family, that's not luck.
Well, we could talk for hours about this. I think reading is very important, and applying yourself to studies. And not always trying to be the most popular person, but rather working towards a greater end. That was the creed of my family. My parents were they felt blessed to be Americans. They were lucky. And we needed to take advantage of that system. And the best way to take advantage and advance yourself from, in my case, poverty to riches, at least in terms of having good things, not being the richest person in the world, was education. And if you're well educated, you are better protected. So, but a big part of it's luck. I happen to be in the right place at the right time.
Thank you.
Yeah.
Thank you very much for sharing today. Mr. Fisher is as outspoken and straightforward as always. Thank you. Thank you.